Ultimate Gold Investing Guide 2025, Part 1 of 2, How to Buy Gold in the UK Step by Step. Gold has stood the test of time. In wars, recessions, and market crashes, gold didn't just survive, it thrived. But in 2025, with record high prices and so many investment choices out there, how do you know if gold is still the right move for you? Whether you're brand new to investing or just looking for something safe and timeless, this guide will walk you through everything you need to know about buying gold, step by step. No jargon, no confusion, just real guidance. Before we begin, a quick but important note. Precious metals are high-risk investments. You could lose all the money you invest. They are not regulated in the UK and offer no consumer protection. This content from Everstead is for educational purposes only and does not constitute financial advice. Always do your own research and consider speaking to a qualified financial advisor before making investment decisions. Gold has been a symbol of wealth for over 5,000 years. But what makes it still relevant in today's world of cryptocurrencies, AI stocks, and ETFs? The answer is surprisingly simple. Gold is trust. When banks fail, when currencies weaken, when markets panic, gold becomes the fallback. Not because it generates income, but because people believe in it. It's a store of value in its purest form. And that belief, built over centuries, is what makes gold powerful. In 2025, global uncertainty is everywhere. Wars, inflation, tech disruption, and rising interest rates. And gold? It's near its all-time high. But unlike hype-driven assets, gold's rise is rooted in fear and long-term demand, not FOMO. Central banks across the world, including China, Turkey, and India, have been buying up tons of gold in the last 2 years. Why? Because they see it as insurance. And for everyday investors, gold can offer that same sense of peace. Let's talk about the different ways you can invest in gold, and why it matters to choose the right one for you. The most traditional way is physical gold. Gold coins or bars you can hold in your hand. Think of coins like the Gold Britannia or Sovereign, both legal tender in the UK and popular among investors. The benefit is clear. You own it outright. No counterparty risk. No digital dependencies. The drawback? Storage, insurance, and sometimes selling it can be tricky. Plus, you'll usually pay a premium over the spot price. If the live gold price is £1,800 per ounce, you might pay £1,950 for a coin. That's the premium in action. Another option is gold ETFs, exchange-traded funds. These are digital investments that track the price of gold. You don't own physical gold, but you get exposure to its value through shares. Popular UK-listed ETFs include Invesco Physical Gold, iShares Physical Gold, etc., and WisdomTree Gold. These are easy to buy or sell, have low storage fees, and allow for small investments. But again, you don't hold the actual gold, and you may pay management fees. A third route is gold stocks or gold-focused funds. These include shares in gold mining companies like Barrick Gold or Newmont, or mutual funds such as BlackRock Gold and AMP General. These are riskier because the companies are affected by labor issues, production costs, and other business factors, but they can offer higher returns if gold prices surge. So, is now a good time to buy gold? It's one of the most Googled questions, and the answer might surprise you. The truth is, there's no perfect time. Gold doesn't behave like typical stocks. It tends to rise during fear, uncertainty, and inflation. And right now, we're seeing all three. But here's the key. Don't try to time the market. Time in the market is more important. Rather than wait for a big dip, many investors buy gradually. This is called pound cost averaging. It means investing smaller amounts over time to reduce risk. Instead of spending £5,000 in one go, you could buy £500 per month for 10 months, smoothing out any price swings. Now let's walk through how to actually buy gold safely and legally in the UK. First, decide what you want to buy. Gold coins like Britannias or Sovereigns, or gold bars, available from 1 gram up to 1 kilogram. In the UK, legal tender coins are often capital gains tax-free, which is a huge advantage for long-term investors. Next, pick a reputable dealer. Look for dealers with years of experience, transparent pricing, and FCA registration if they're offering investment products. They should also offer secure delivery or insured storage options. Trusted UK dealers include Royal Mint, Bullion by Post, Baird and Amp Company, and ATS Bullion. Always compare prices. Check the live spot price of gold and calculate the premium you're paying. A good premium for a 1-ounce Britannia in 2025 might be 5% to 7%. Anything above 10% is expensive. Then choose how you want it delivered or stored. Home delivery is fast but requires insurance. Vault storage is safer and ideal for larger investments. Some dealers offer free vault storage for 6 to 12 months with your purchase. And finally, keep records. Receipts, certificates, and photos. These are essential for resale or tax purposes later. Now let's talk about taxes and legal considerations that many beginners overlook. In the UK, the rules are actually pretty friendly if you know what to look for. Capital gains tax, or CGT, kicks in when you sell an investment and make a profit over £3,000, your annual allowance in 2025. But UK legal tender gold coins like Britannias and sovereigns are exempt from CGT because they're considered currency, not assets. That's a huge win for UK investors. So if you bought £5,000 worth of Britannias and sold them years later for £10,000, you could pay zero CGT. As for VAT, investment-grade gold is VAT exempt in the UK. That means you don't pay any VAT when buying gold bars or coins with a purity of 99.5% or higher. This includes Royal Mint Britannias and most trusted bullion bars, but silver and collectible coins often include VAT and can be harder to resell. There are no legal restrictions on owning physical gold in the UK. You can store it at home, in a bank deposit box, or in an insured vault. Just remember, if storing at home, notify your insurer. Many home policies won't cover gold unless it's declared. Now it's time to separate fact from fiction. Let's clear up some common myths. Myth 1: gold always goes up. That's simply not true. Gold can be volatile, especially in the short term. In 2011, gold hit a high of over $1,900 and then dropped to around $1,100 a few years later. Even in 2025, while gold is near record highs, it still moves with market sentiment. Myth 2: gold is risk-free. Holding physical gold reduces counterparty risk, but it's not risk-free. There are liquidity risks, storage concerns, and premium losses if you overpay. Myth 3: you need to buy a full bar to invest. Not at all. Gold is available in tiny amounts, from 1 gram bars to fractional coins starting around £50. It's beginner-friendly. Be cautious of unregulated sellers offering too good to be true deals. Avoid overpriced numismatic coins sold as investment grade. Also watch for high storage fees that quietly eat into your return, and dealers charging excessive premiums without explanation. Always compare, research, and get full transparency. Let's bring this to life with 3 real-world scenarios. Tom, age 21, is new to investing. He starts by buying a 1g gold bar each month for around £70 to £80. He stores them in a safe at home and keeps receipts. After 12 months, he's built a gold reserve worth nearly £900, all without stress or debt. Amina, 35, is a working mum who wants to hedge against inflation. She invests £5,000 into 5 Britannia coins and stores them in a Royal Mint vault. She's not looking for a quick profit, but to protect long-term value for her kids. Alan, 62, is retired and focused on wealth protection. He splits $10,000 to 60% in physical gold in insured storage, 40% in a low-fee ETF through his ISA. This gives him stability, liquidity, and peace of mind. Each strategy works because each person aligned their gold investment with their own goals. So is gold right for you? That depends on what you want. If you're looking for long-term security, inflation protection, and independence from the financial system, gold is worth considering. But it's not meant to replace your entire portfolio. It's a hedge, a way to protect the value of your money when the world feels uncertain. For beginners, here's a simple roadmap. Start small, even £50 per month is enough. Choose CGT-free UK coins or a low-fee ETF. Avoid overpriced collectibles or unregulated sellers. Think long-term, not quick flips. Keep it safe, insured, and well-documented. And here's the most important thing. You don't need to understand the global economy to invest in gold. You just need to understand your goals and how to protect them. If this helped you understand how to start investing in gold, don't stop here. In part 2, we go even deeper, comparing gold to property and crypto, explaining how to use gold in retirement planning, and showing you exactly how to sell it when the time is right. It's everything you need to build long-term confidence. Click the link on screen or in the description to watch part 2 now. And don't forget to give it a like and subscribe to Everstead for more calm, clear, and timeless financial guidance. Until next time, stay informed, stay steady. Precious metals are high-risk investments. You could lose all the money you invest. They are not regulated in the UK and offer no consumer protection. This content from Everstead is for educational purposes only and does not constitute financial advice. Always do your own research and consider speaking to a qualified financial advisor.